Well, the stock has been at a 52-week high going into the numbers. Reliance Industries is the one that I'm talking about. So let's bring on board Mayuresh Joshi, fund manager at Angel Broking, to talk about what he's been expecting in trade today with regards to individual stock ideas. Mayuresh, what's the sense on Reliance Industries? Could today's numbers take the stock way higher come Monday morning? The expectation is of a positive surprise, or rather positive delivery this time. Do you think they'll be able to deliver?
Morning, Aisha. I think clearly Reliance story, which is going to get played out, is going to get played out at FY17 onwards. So the new facilities and commissioning of a lot of activities that Reliance is undergoing on the refining side, the petchem side, is going to have a positive effect on numbers from FY17. However, for this quarter, I think the market is analyzing that the numbers will be exceptionally better, more to do with how refining margins are going to pan out and how the petchem margins are going to pan out, more or less to do with the higher gasoline spreads and the cracks on the refining side of business, the higher polymer margins for the petchem side of business. And clearly, I think the GRMs expected to be in the range of 9.4, 9.6. Other income expected to be consistent between that 2100, 2200 mark, and profitability expected to be consistent as well. So I think numbers expected to be good from Reliance, but the structural story, in our opinion, stays only from FY17. However, I think we remain constructive on the stock. I think long-term investors can definitely look at the stock on declines. It is one stock that one really needs to have in their portfolio, specifically with a 2 or 3 year time horizon.
Okay, Mayuresh, the other interesting one, of course, is Wipro, which could probably react a little bit to its numbers, its commentary ahead. While the numbers were in line, nothing special there. I think the Q2 guidance wasn't that bad. Q1 composition wasn't that bad either. Is it a stock that you would look to, trade or invest in, or are the Infis, TCS, HCL Techs, or the mid-cap IT names much better as an investment bet?
Morning, Neeraj. I think as a theme, I think we've been consistently liking the top-tier IT names. The profit warnings probably which have come through for specific companies like a Tech Mahindra, I think there are specific issues related to the telecom side of business. But looking at Wipro's numbers and the kind of guidance it is given, the management expects Q2 dollar revenue growth to be anywhere in the range of 1.5 to 3.5%. So A, that's a positive sign. B, I think the EBIT margin contraction that we saw in this quarter, I think was well known by the markets because of the wage hikes taken, the currency impact that would have come through. The client addition had been decent, and again the IT services probably has held up for Wipro, and again I think their expectation is that it will hold up going forward. So what do I like? I think I like generally the top tier IT pack. Infosys has delivered exceptionally well. TCS trades at a premium, Wipro trades at a discount to all these companies. But again, I think a mix of all these companies is something I like. Wipro might react a little bit negatively based on what the numbers have been. But clearly, I think with a long-term perspective, I think all these top-tier names, I think, sound interest to us. Wipro not excluded from that list as well.
What did you make of A, Lupin's performance, Mayuresh, and B, the bigger concern, which is the mammoth acquisition that they announced, which, in the absence of details, looks rather expensive?
So Aisha, I think A, on the numbers, I think numbers extremely disappointing on all counts. Top line, the EBITDA margin disappointment was quite evident. And again, I think the bottom line, I think the other income supported the bottom line growth for this quarter. But again, I think higher spends on the R&D front probably compressed EBITDA margins. The top line probably did not grow because the US generic business, as the management indicated, has not been doing well. I think the A&D applications are not coming through for Lupin. And again, I think last year's quarter also had a fair bit of Suprax composition. So I think with the generic competition coming through, you're probably seeing some amount of dent happening specifically in terms of the US generic business. So again, I think numbers disappointing, and I think the numbers might disappoint at least for a couple of quarters. When you talk specifically of the acquisition related to Gavis, I think the acquisition prima facie in terms of their product suite looks quite interesting. So I think it gives Lupin an entry into the generic market. It's a dermatology specialist. It's got niche products. It's got 66 A&D applications which are pending. when we looked at the numbers, I think market cap to sales of around 9.2 times. Yes, I think prima facie it looks expensive, but the management is quite hopeful that from FY18 onwards, it might add to the revenues substantially going forward. But I think again, FY18 is a long-drawn process. It's quite some time away. So clearly, I think A, numbers disappointing. B, I think acquisition expensive. And again, I think even at the current level, Lupin looks quite expensive to us. So clearly, I think downgrades on the stock are quite evident. We'll see further correction on the stocks, in my opinion.
Okay, Mayuresh, stay on. So much more to speak about. Remember, a lot of stocks became extremely active yesterday. So Polaris Consulting, for example, really shot up in trade in the last few minutes. Actually did very well for most part of the day. Ended the day at the day's high. So do watch out for Polaris Consulting. We'll get you chart checks there. KN India is the other really interesting mover. We flagged off this stock yesterday. And a smart move there on KN India. Maybe the upsides are more, so do watch out for this one. And Sun TV has just made a bounce back. Is it a rise from the ashes, or will it actually, is it just a dead cat bounce? That is something that we'll talk with our experts as well. But as we head into the break, you'll get a chance to hear out a slice of a conversation with Navneet Munot of SBI Mutual Funds on the sectors to bet on in the phase of economic recovery.
So I think if you look at the domestic cyclicals, industrials clearly look good.
Define industrials for me.
Okay, so capital goods, engineering, construction, look at a couple of things. So let's say the activity in mining is going to start. So people who are in earth moving equipment, people who are into construction, people who are, so all those guys are going to benefit. The activity in the road sector has increased substantially. I expect the same in railways. I expect that in defense. I expect that in power T&D. I expect that in urban transport, several other activities. So both the central and the state governments are going to invest heavily in infrastructure, and which will lead to ultimately a private capex. As the overall capacity utilization goes up across industries, private capex is likely to follow suit. But I think the initial government expenditure and plus this mining activity is likely to push up the activity. Also, there is significant opportunity in terms of the whole manufacturing export in the light engineering side. So when you said they explain me, so let's say you buy forging, abrasives, compressors, gears, bearings, any of these guys, good quality construction players. India will need a lot of construction ability.
But a lot of these stocks have run up already on hope. My only challenge is that I agree with your thesis. But just the way you're thinking, others are also thinking like this.
I think look at their book to bill ratio, look at the way order books are building, and when the execution improves, just go back to the cycle and see 2003 to 2008, what happened in some of these companies. And I think something similar for next 5 or 7 years. I'm not talking of next 1 or 2 year opportunity. So they may look, richly valued if you take only a 1 year view, but I think over a 5 year view, I think that there is going to be a growth multiplier. The other way to play, of course, cement is a similar theme.
But I looked at ACC numbers, Ultratech numbers. Somehow the numbers are not inspirational. We can say that, okay, don't look at history, look at future.
These are early cycle plays. So with some of the names that I took in industrials, as well as the cement are the early cycle plays. Autos is the another one. Commercial vehicles or the even other auto ancillaries, I think they would be the early cycle plays. And longer term, of course, there would be some opportunities in the financials. There would be, similarly, as I mentioned earlier, even in the overall consumer space, we believe the aspirational consumer or the urban consumer plays could be very interesting.
Back with the market right here on ET Now. Let's revisit what the SGX Nifty is indicating, and in line with the rest of the globe, it's a tempered mood for the Singapore Nifty as well, which indicates a bit of a soft start. It was lower by about 0.2% the last time we checked. Status quo on that one. 85.89, the struggle with 8600 or 8640 as Mitesh Thakkar would put it, that continues in trade. But let's get you some more trading ideas. And Mitesh, interesting to see you've got a sell call on Britannia. Why is that?
See, I think a reverse of what is happening on Tata Motors is happening on charts of Britannia. The stock price has done extremely well now showing very overbought readings on indicator basis, and on the intraday charts we have a situation of a breakdown. So this is a classic corrective pattern. My idea would be to sell if it starts trading below 2840, which is the 20-day average, and then look at declines to about levels of 2750, 2745, and the stop loss on the trade would be just about 2881.
Sandeep, now very interestingly, you have a couple of sell calls, and let's start off with the first one. TV18 broadcast, 2 bad days. Would you still go ahead and sell it after this about 18 or 20% downtick that we've seen?
Neeraj, in fact, at a level of 37, it has broken a very, very strong support. Now that will act as a resistance, and on the downside, I see levels of 30 to 29 coming in. So I would talk of the move extending down to 29 over the next 2 or 3 trading sessions. And the kind of volumes that have been witnessed on the selling in the last 2 days are much, much higher than the normal volume. So that suggests a further down move is in the offing. So I would keep a stop loss of 36 and play for a target of anywhere between 30 and 29.
MBL Infra, Mitesh, why has that propped up on your buy radar?
See, it's a clear case of price and volume breakout. I think good jump in traded volumes on NSE. I think it's more than about 500% jump on the 5-day average, along with the fact that there were a lot of positive crossovers and indicators. So this is a buy with a stop below 558. I think 625 to about 630 could be the price range which the stock can hit in the next few days.
What about Concor, Sandeep? That's again a result reaction, but will you still go out and sell the stock today intraday?
Neeraj, I would. It has broken all the important supports of around 1680 or so. It has closed at 1654, and any move towards 1680-85 should be sold into. And I expect levels of 1550. I would talk of a 5 to 6% trading downside, which should come in pretty soon over the next day or two. So I would play for that.
Okay, so sell calls on a lot of these stocks, and I reckon sell calls on Lupin made a lot of money. The stock has corrected 3 days in a row. The numbers weren't the best. There's a large acquisition. Let's try and get in Awan to give us a snapshot of what all the brokerages are saying this morning. I mean, we've discussed Lupin quite exhaustively yesterday, but interesting to get a sense of what brokerage notes are talking about. And Awan, I think a bunch of brokerages have come out with their view. Let's start off with what, CLSA?
CLSA, but just to give you a broad perspective as to what the similar point is between all of the brokerages, they believe that indeed this is a fairly sizable acquisition and it's fairly expensive also at the price that it was bought at, and that they're still awaiting quite a few intricate details regarding the same. Start off with CLSA, then they believe that yes, it's a positive because it certainly broadens the overall pipeline of complex generics for the company. It's a long-term positive, particularly towards the specialty and complex generics segment, and the acquisition is going to be EPS accretive in the first full year. Morgan Stanley alludes to the fact that it is expensive in the absence of details, but the acquisition will give a first manufacturing site in the United States for Lupin as well. It potentially assumes an incremental low cost of capital, and the payback period for this could be close to 7 to 8 years. Bank of America also believes, on the face of it, it is a bit expensive, but it will be a good addition for Lupin's US capabilities. And finally, Citi also believes that this is going to certainly enhance Lupin's scale in the United States, and as well as strengthen their capabilities in key therapies.
Okay, that's the takeaway on Lupin, and might I add, it's not going to be a pleasant ride for Lupin, at least given by what the brokerages seem to be stating, not just on earnings, but more importantly on the big acquisition that they made. Perhaps chewing more than they can digest is the word really coming in from most brokerages right now. But yes, Axis Bank as well should be on our radars this morning, considering they too will come out with their earnings. Mayuresh, what's the call on what Axis may actually do today?
So actually, I think we're quite optimistic on Axis Bank in terms of pure earnings expectations. Our take is that NII growth should be in the range of 19 to 20%, close to that 3,920 odd mark. The NIM should be anywhere between 3.7, 3.8. You might see some impact happening because of the base rate cut that Axis had taken, as did a lot of banks. And the profitability again expected to show a 19% growth to 1920 odd crores. So again, I think if you go by what the management commentary was, I think the provision figure is expected to be quite stable. Their provisioning ratio itself is close to 80%. We have assumed credit costs to the tune of 75 to 80 bips. So I think that cushions earnings expectations that a lot of analysts might have on Axis Bank. And clearly, I think our own take is that stable asset quality should be reported as per the management commentary given in the quarter gone by. So clearly, I think earnings growth in excess of 21% not ruled out over the next couple of years for Axis Bank. And though the valuation compared to the other PSU banks appears expensive, I think the earnings trajectory should hold up for Axis Bank. So I think at 2.2 times price to book FY 17, we still remain optimistic on Axis Bank within the private space.
Okay, now some active stocks that were extremely buoyant in trade yesterday, and I was speaking about some of those. So Mitesh, let me come to you with the first one, and that is SKS Microfinance. Smart gains, 5.5% up, good results, stock trading at new highs. My question is, at 560 or 565 for an SKS Micro, would you go out and buy it?
See, I think the only worry which I have, and I think the trade still looks very attractive to me, the only worry is that the stock has run up quite a bit and slightly placed far away from the short-term moving averages. But yet I think it merits a buy. Keep a stop below 540, 620, 625 could be a short-term target over here.
Covering lead rally, and which is why I said I was a bit surprised, because it was probably a foregone conclusion that SKS will deliver good numbers. Sandeep, very quickly, from you on Polaris Consulting, the stock ended at the day's highs yesterday.
Neeraj, I have a view of a 240 or so. So I would be a buyer maybe on a corrective move. Maybe 205, 207 would be that right level at a close of 211. I don't see the stock break 200 or maybe 190 would be a safer stop loss. But 240, 245 is in the offing over the next few days or weeks.
Ken, Mitesh, and what a lift off this stock got yesterday. What a big move coming in the stock price. Does it look sustainable?
Yeah, I think the first leg of up move has happened. Again, a very similar setup to what I've been talking about on Tata Motors. Extremely oversold stock, some kind of intraday reversal leads to a strong rally. I think it needs to start closing above levels of 185, 184, 185 to show some more strength. I think once it does that, then I think you might have a more sustainable up move with possible targets of 208.
Okay, about a minute and 10 seconds left for the markets to kickstart trade. The SGX Nifty indicating a slow start. So we actually have a bit of a gap down, a bit of a continuous action from yesterday's session. So 8583 is what the SGX is indicating. We're well open about 8580 or slightly lower than that. Active stocks, I think JP Associates, well, even though it's now practically a penny stock, could well see some more downsides. Do watch out for this one. I think what will have some very interesting reactions are stocks like SpiceJet. On that Economic Times report, SpiceJet could well be active and extremely active at that. So watch out for JP, yes. Watch out for SpiceJet. Watch out for Biocon as well, where the numbers have come in much better than estimates. The profit numbers, almost 25 or 30 crores more, 20 or 25 crores more than what the street was working with. So Biocon could have a very interesting day of trade today as well. Dewan Housing Finance, good numbers. Stock ended at the day's highs yesterday, and they've got the SEBI nod to start the MF business. So this could be interesting. And NBCC, I think Aisha brought about a very important point about why divestment couldn't be a big problem for this one. But the news at hand today is that they've signed a pact for redevelopment of IPA campus worth 425 crores or 435 crores actually. So that should be active too. But very quickly, how have the markets kick-started? Trade must be lower. Yes, the Nifty actually showing a very believable 20-point downtick. This could well be the case today. Now a 0.5% downtick. We may not have that, but yeah, probably some downsides could happen at the start of the trading day itself. The Sensex flat too, so no great cues there. Let's bring up Wipro, let's bring up Lupin, and let's bring up Bajaj Auto. Three names that should be reacting marginally. Wipro, a flattish reaction. Let's see if Lupin is continuing from where it left off yesterday. It's had 3 bad days, remember, so wouldn't be surprised even if there is some bit of a bounce back, but for now it is showing a downtick. Brokerages have expressed a bit of a concern on the money that they are paying for this acquisition. May not be a 10% downtick, but could well see maybe a slice of red also, or could be a green also because it's fallen for the last 3 days. And Bajaj Auto, after a 5% downtick yesterday, not too much. Actually, lastly, let's bring up NBCC for our viewers. It's typically not a stock that will start reacting too early in the pre-open session, but marginally up in the session.
Yes, considering that big move which came in NBCC yesterday itself. But the bigger worry today is at the bottom of your screens. The currency, which is now almost nudging 5 more paise, and we would be hitting the 64 mark. And that indeed, slowly it's crept up and now nudging the 64 to the dollar mark. Weakness of another 19 paise coming in for the currency. So I think this is a key monitorable that one needs to watch out for, the kind of weakness that is creeping in the currency markets. And this, of course, is on account of dollar strength. More importantly, the dollar strength is also, impacting the fall in commodity prices, which is only getting aggravated further. But 63.94 on the rupee, that is something to take notice of. But even as most parts in India have been experiencing rainfall of late, IMD has reported that they maintain that efficient monsoon guideline. Let's hear out more on this from Manisha.
Even as the last couple of days have seen progress in monsoon almost all over India, it's a fourth straight day that IMD maintains that the monsoon is still 7% below normal since 1st of June. IMD also says that the monsoon is continuing to be active over central and east India, but it is still deficient in 11 subdivisions in west and southern part of the country. There also is IMD saying that monsoon is expected to be deficient in Gujarat and Maharashtra and UP as well. These perhaps were the areas which saw deficiency in monsoon between 20 to 60% on the lower side and will still take some time to catch up. There also are reports from IITM Pune, and they expect the monsoon to be active in central and north India. And according to them, the next 10 to 15 days is expected to see good progress in monsoons. It also is about monsoon season experiencing oscillations, which means that there have been some days where you have seen heavy rainfall in some parts of India, but then there also have been periods of inactive rain. It has been a jerky monsoon season, and that is what is expected of it going ahead as well. The report also mentions that the monsoon will slow down post 9th of August, but it is expected to see a good flow over. The water reservoirs are 12% above normal, so that really takes off that concern about less water coming in for most of states. The good news continues, and it's about the Kharif sowing, which is 62% higher year-on-year basis. There have been a bit of pocket of concerns. MP, which had seen a lot of sowing in the first week of June itself, will have to re-sow in nearly 2 lakh hectares as monsoon catches up yet again. Maharashtra crops have been under moisture as well, but the next 1 week is expected to be positive, or many of these concerns actually can go away in that time.
Well, thanks a lot for that, Manisha. I tell you, some of the agri-related stocks haven't done too badly off late, I must say. I mean, chain irrigation is not the one, but a small cap stock, EPC Industries, it's a Mahindra Group company, but EPC has slowly crept up its way to 180, 190. I think at 189 or thereabouts, probably, if I'm not wrong, is EPC Industries. So a good move, really. Monsoon and monsoon-related stocks. Now, Shriram EPC is the other one, but EPC Industries itself, yes, this is the Mahindra Group company into micro-irrigation, 188 or 190 currently. Good going for this one. But this may not be top of the mind of dealing rooms. What is the question to Darshan. He joins in right now. He would have done his channel checks. And Darshan, what are the top 3 stocks on the minds of dealing rooms this morning?
See, Wockhardt for one, obviously news coming in that, there have been no FD, no 483 by the FDA as far as the Himachal plant is concerned. So sentimentally, this will be a positive. Over the past few days, we've seen that, whenever Wockhardt actually goes down, it does come back significantly. So there seems to be inherent strength in the stock as far as the series is concerned. So that's the first stock. The second one is United Spirits, came out with a very good set of numbers. Sales growth was there. They've turned it from a loss-making company in last year to a profit making this time around. The counter is something that dealers are watching out for. And Tata Motors for one is something that dealers are watching out for. The commentary that came in yesterday from Daimler was very, very encouraging. Even in Europe as well as China, they're seeing a lot of growth coming in, which should bode well for Tata Motors, given the fact that the counter has been beaten out of shape, mainly on China concerns.
Okay, Darshan, we're going to leave it at that. Those are some of the interesting names which could prop up in trade today, and Tata Motors, of course, being one such case in point. Lots of other earnings as well, outside of Axis Bank and Reliance, which are the 2 nifty names which are going to come out with their earnings. Watch out for TVS Motors and M&M Financial Services and Crompton Greaves. These could be very important mid-cap earnings within their respective spaces. And Mayuresh, I want to come to you on TVS Motors. What's the expectation expectation from TVS this time around in terms of a quarterly performance?
So clearly, I think strong performance expected both in terms of how the volume growth will pan out for TVS Motors, both on a quarter-on-quarter basis as well as on a year-on-year basis. Again, our own take is that the realizations per vehicle should show a marginal uptick when you do this comparative checks on a year-on-year comparison. But clearly, I think the kind of product launches that TVS has got, what it does with the BMW tie-up, I think those will be interesting points to look out from the management commentary side. Margins again expected to remain in the range of 6.5 to 7%. So clearly I think our take is that when you look at the two-wheeler space and when you specifically look at Bajaj Auto's numbers, I think if TVS Motors is able to deliver, further upticks on that stock is not ruled out.
Okay, we've discussed almost all the key earnings that come out today. Mayuresh, a bunch of mid-cap earnings coming out with numbers, and I shall ask you about TVS, yes. The two or three that I'm particularly interested in, one of them is Everready, sparkling move over the last 3, 6, 12, 15 months, as you put it. Tata Elxsi, very good. And Supreme Industries, I don't know how closely you look at this one, but it's having some problems of late after being a stellar performer in the recent past. Do you track any of these companies closely?
So Neeraj, not on Supreme, but clearly I think Tata Elxsi has shown an exceptional move. And again, I think if you look at their business verticals, I think all the business verticals are doing exceptionally well. But again, I think the price movement has been fairly resilient. So again, I think when I look at the IT pack and the kind of earnings trajectory that gets panned out over the next couple of years, top tier is something that I'll still stick my neck out with. When it comes to Everready, probably I think the kind of debt levels that Everready has on its books, I think that is a point of concern for me specifically. And again, I think if you look at their business outlook and a lot of management interactions which have happened, though they remain extremely optimistic, I think we will still remain with players like a Surya Roshni, where we believe that even though the steel business has been a big drag on their company's overall profitability, I think the LED business has dealt exceptionally well for Surya Roshni, and clearly I think the EBIT margins that the LED business exhibits more or less offsets the kind of losses that the steel business makes. So not directly comparable, but again I think Surya Roshni is something that I'll continue preferring even at the current levels.
Well, at a 5-week low for the currency, 63.97. So watch out for that one. Seems like we're going to slip all the way to 64 pretty soon. Couple of other numbers which are reacting, or other stocks which are reacting to their earnings. Rallis, what a big miss they've had. The net profit has sunk about 10.5% this time around. EBITDA has taken a hit of about almost 5%. And on the other hand, it's a thumbs up for Biocon, while Rallis, of course, has sunk almost about 8%. Biocon is the one which is rising sharply on account of their fabulous numbers. Of course, a whole lot of excitement around Syngene as well. 3.5% higher for Biocon. 475 is where the stock is. Mayuresh, I'm not sure if you track Rallis, but what's the take on Biocon? And more importantly, Syngene, still, you know, early days, we're yet to see what sort of pricing, etc. they come out with. But would Syngene definitely be worth a look?
Oh yes, and again I think if you look at how the business model has evolved for Biocon, Syngene is the one which is probably driving the overall profitability for the company. Now I think how they place their IPO would be very interesting. So I think if it comes at a much lower band, so I think we are hearing any figures of anywhere between 250 to 300 rupees in terms of the pure size, in terms of pricing. But clearly I think Biocon's numbers delivered exceptionally well for this quarter. Whether they'll hold up, I think the management commentary would be key. But again, I think the ROEs, ROCs are still suppressed between that 11-12% kind of a mark. And the kind of capex that they're probably doing and they need to do, the ROEs, ROCs will remain subdued. So in my opinion, yes, I think the stock will react positively. But then again, I think the triggers for the stock would be how they price Syngene and the kind of business outlook that they've got, specifically in terms of their capex spends on their standalone business.
Well, but I think the talk of the morning day today has to be Rallis and the miss that the company's had on its quarterly numbers. No wonder that the stock is doing what it is doing. This is post the pre-open rates having settled in, 8% down for a Rallis. After a really long time, Rallis started making a move, and that was extremely short-lived because there's nothing that's happened in the stock today. Just 8% down, no sign of an I don't think there'll be signs of an uptick today. May just recover marginally if at all. But I think it's had a good rally ahead of its numbers, and now the numbers have disappointed, and which is why the stock is doing what it is doing today. 232, 8% down and counting. Mayuresh, before we thank you, your top idea at Angel Broking currently?
So within the large caps, Neeraj, private banking is something that we continue to prefer. Axis, ICICI. Within the auto space, Maruti, Ashok Leyland is where we believe that the earnings trajectory should continue. Within the mid-cap space, I think MBL Infra is something that I like. I've heard Mitesh give a technical view, but clearly even on the fundamental side, the order book looks quite decent. The kind of expectations that the management has, specifically from an FY16 perspective, looks quite decent as well. And when I do a simple SOTP calculation, if I look at their standalone EPC business and if I just chip in cash flows from their BOT projects, I think the valuations appear quite reasonable as well. So I think the cash flows appear decent for the latter part of FY16, and I think that will probably shore up the earnings estimates for MBL Infra. Again, valuations at the current level not too expensive, and this is something that we like, along with something like an LIC Housing Finance, which has again posted excellent set of numbers in our opinion.
Okay, Mayuresh, we'll leave it at that. Thanks so much for taking the time out and joining us and giving us that perspective. Okay, let's try and now nail it down to some more trading ideas. Mitesh, aside of the ones that you've already given, what else would